Ouch. This is really bad. Stocks are down for 3 days in a row. Leaders lead to the upside, but they also lead to the downside. Tesla's down by 4, Oracle's down by 5, and Eli Lilly is down by 4. The reason why this is really scary is because of exactly the pattern we talked about on the weekend. It's a fail breakout pattern. But today, I really want to focus on just the most recent candle that we printed here. And it's for a very simple reason. If we look to last week's low, 654.3. Where are we right now? 654.41. Oh my God. It's 11 cents. That's right. And because we're only going into Friday tomorrow, we're going to find out whether or not this turns into a bearish engulfing candle or if it doesn't. It's that simple. So if we go to our recipe here, if we continue to get lower highs on the 1-day chart, which I just showed you, again, I'll remind you right now. Let me get all my lines back here. Let's go back to our daily chart. If all we do is maintain the lower high, eventually we're going to run a test and we're going to find out what's going to happen to the chart. There we go. I got my lines back. All right, trying something new today. So what this basically means is that currently 654.3 is last week's low. If we continue to maintain lower highs, it means that eventually we're going to lose this area. It's not really all that complicated. Going into next week, if we maintain the low from today, that's going to be the same area for us to take out tomorrow. What that basically means is that the gateway for the bears is probably going to stay the same. We're just going to move the date forward to October. If we do hold on, man, nice dip buy there, bulls. That was exactly where we wanted to buy. Let me remind you what can happen when we come down for a micro higher low. Micro higher low, we go up. Right here is where it's really close. Look right here. We're looking to the L. 615, 615, 617, 618. Right here, it was really close. It does look similar to here too. If the candle sucks back up, that would turn into a doji, which basically kind of looks like a cross. I think the difference here is that we were still extended from the 50 in May, but we did have a brief pause. We did have a brief pause here. So honestly, I don't know. The market can remain irrational longer than we can remain solvent. And what's really important for me going into the month of October is the monthly low we have to maintain here. Let me remind you, if the daily's bearish and it progresses to the weekly, it could potentially go to the monthly. So if we lose 654.2, we could go all the way down to 634.92, which basically means we're starting to make progress towards support. Where could support be? I really like 613, right? That's roughly a 10% decline from right now, which would basically be one of these. If we look back to the previous times we had these big declines, again, going back to the weekend video, I'll leave you a link for that at the very end. That's a 20% correction. That's a 10% correction. So we just had a 20% correction. So if we're going to track, let's look and see what happened, because 20% and then 10%. Oh, far from the moving average, crash line on the moving average, bounce. Is that pretty simple? Crash land on the short-term moving average and then bounce. The all-time high is going to be roughly there if it maintains it for a few more weeks. Oh, so a little bit different than this time, but after we leg up, we back test, and then we pass. Leg up, leg up, leg up, pop flag, pop flag, pop flag, over and over and over and over and over. All right. And some stonks just can't stop. Here's a few. We have Intel higher by, oh, it's up even more now. It's up by 9% today. We were in this one. We're now out. Look at Apple. Why is Apple up so much? It's very strong. Yes, it is very strong. And we noted a few more in our Slack channel today. Maybe I'll have a chance to go through those a little bit later. So here's the simplest takeaway. The gateway for the bears got awfully close. After you tap an area multiple times, it tends to wash out fairly quickly. If we lose 654.29, watch for the next support area. That's a lot lower at 630s, like I mentioned. Otherwise, we're in fully bully boomtown. Buy L dips. What's dips? Well, it was a good question we got on the stream this morning. So a dip is 5%, right? That's green. That's nice guacamole, right? Those chips love guacamole. 10%, that's a little bit of pico de gallo. There's a little bit of red in there. And then salsa is 20%. So if you like guac, pico de gallo, or salsa, just be ready for it. I think we might get a little bit of pico de gallo. That's just what I'm predicting here. All right, moving forward here, there was the bear recipe. So if now we really think about where we could go from here, it's really simple. I'll lay it out for you, and then we'll look at a little bit of news that happened today. If we look here to our weekly chart, which is basically the same thing we did to the daily chart, all we need to do now is the same thing we did on the daily to progress to a higher time frame being bearish. We got to print a lower low. That's the gateway. Why? Because right now we're bullish. And the bullish pattern means that once we change the trend, all that it requires are higher lows. Those are sufficient. Why? It's defense on the chart. So until the bears actually print a lower low, technically we're in bull territory. 1 out of 4, it's not a passing grade. We could do that tomorrow. So by tomorrow, we might do this. We might do nothing. We might also get to number 2. All that would require is for us to go down by 10 more cents today versus today's low and then close below that. That would be below 654.3. We also know what catalyst could actually drive that. We also talked about this. It's right here on the notes. I believe it's a second link from the description. So we got GDP today. Oh boy, was it strong. Oh, whoa. And then tomorrow we got PCE. So what I'm really asking myself is, if GDP came in at 3.8, is inflation really at 0.2 or 2.9? I don't know. I don't. So I'm not going to pretend like I do. Oh, that's also a little bit scary. You can read that if you want to. We'll come back to the news in a moment. Okay, so by tomorrow, we could actually be at 2 out of 4. And then that means that, again, let's pretend we're bearish tomorrow. So we're going to get 1, 2, or even just 1. That's what the daily chart did. By Monday of next week, we could print another lower low. Why? We're near the low here, right? We have a full candle. We're red by 1%. I would say we're closer to the low of the week than we are to the high. If you look at the total range, here's the high, there's the low, there's the open, there's the close. We are closer to the low. I can't draw right now. There we go, because it's really tight, versus the high. Means we're bearish. A bearish engulfing weekly candle would be bearish. The same thing happened on the daily chart. It's actually a really good thing for us to look at here. Let's go back to the 1-day chart. It's not by a lot, but if we look right here, it's actually 1 out of 4. You look at the high, 667.29, 667.34 is the all-time high right there. But then we do go down to a lower low. 662.17, 661.98. Looking at the L right here for the low. So it lost it. Technically went to 1 out of 4. We talked about this. Went here, and then it leapfrogged to number 3 on the next session, because right here, it closed below the low. Pretty simple, huh? Yeah, trading should be simple. All right, there we go. So technically speaking, that's where we are. We talked about the economic data. What comes out next week? Payroll numbers. Why? Well, it's the beginning of the month. So this is going to matter right here too. The PCE and unemployment rate will matter for the Fed. I think right now they're deciding whether or not they're going to cut in December. Ooh, this is a little bit nerve-wracking here. So let's look at this. BTC, after it lost that 111.5 area, it slammed basically right down to 108.3. That was the area I talked about. A really important pivot, because support acted as resistance, and then support acted as resistance right here. So now it looks like we might lose it. If we go over here to Bitcoin, let's go to BTC. It's down more now, 109.5. It's bouncing off that area, dead cat bouncing. So I think it really comes down to the print tomorrow. What I would note here as well is that there's a really big compression for volume. We're probably going to see a spike here, either going to be higher or lower. I'm not sure which way. There's some things that just won't quit either, like gold, like silver. We're seeing some bullish news out of China as well. So that's the Bitcoin move. And again, this was a leading indicator for us. If we look here to a chart, a lot of people are probably familiar with. This is BMNR. This is the ETF for Tom Lee. There you go. Not the drummer. If you look here, we're right on support. We're right on an uptrend. I'll be very curious on this one for myself. So we had the high, we had the lower high, we had the lower high, we have the low, we have the higher low, we have the higher low. It's called a pennant. It's a triangle. It's getting tight like a slinky. Eventually, it's going to explode. A few more quick things we can look at here. Actually, we'll skip that for now. We'll come back to it if we need to. We'll close that out. All right, looking here to the fear and greed. So we're sitting here at 52. Remember how we mentioned it was a lower high earlier in the week where we didn't quite go high enough here? It was 66. We made it here to 62. Close, but no cigar. So what that basically means now is that this does look like a head and shoulders. So the fear and greed, head and shoulders, knees and toes. We went all the way down to 3 or 4. Wow. 3 or 4. Yeah, that's very extreme. Is the same thing going to happen now? Well, the short sellers are trying to get in there. Look how short they are. Jeez. We talked about this. There's a little bit of news coming out. So I forgot about Costco. That'll be after the bell today. Let's quickly look and see what it did. Slightly down. Who cares? All right, there we go. This is where we were going into this week. That number for GDP came in with a surprise of 3.8. It was also probably largely due to AI. Geez, whoa. And then finally, there was a few more quick things I want to go through here. Let's see if we have time for it. All right, I forgot to ask you for a favor too. Maybe you'll smash a thumbs up without me having to ask. I'll go through these on the stream tomorrow, so that's what I'll encourage you to do. There's a lot of charts here, notably the dollar on the 12-month chart, but then also the Russell here. So I was talking about this on the weekly candle close. I was talking about a failed breakout. So I'll quickly show you what that looks like before we go further. It's this right here. Go to a higher high, fail back below it. I call the fail breakout. Here it says false breakout. If we go to IWM, we look at a weekly or monthly chart. What do we know? Poked over, fell below. Did the same thing here. Got above its previous all-time high, couldn't quite hold it. So it went over, fail, false break. Again, went to a higher high, not by a lot, but then the slide did happen after. So went to a higher high, slide happened to a higher low, and now it did the same thing. So low, high, higher high. It might be overdone now, though, right? Might be stretched. There's not really a lot of volume to justify continuation here. Other than that, there's maybe one or two more quick charts we have to look at, but the broadening out is probably the most important thing for me. Otherwise, we're probably going to need to do a little bit of a dip, right? 1% dip is not enough. I want to see 5% or more. And then finally, just really quickly, pause right now if you need to. Here's the notes going into this week for the weekly chart. And I already told you, right? There's a lot of warnings. It's all right here. Be mindful of it. Try to be like water. The weekend video is going to go through in more detail, but at a very high level, it basically means that mathematically, we are 5 standard deviations, or in ATRs, from the 50 monthly moving average, which means that it might be multiple months of downside. I encourage you to click on the video now if you want to see more. Thanks so much.